live session, which will be held every Wednesday. I'm really excited to get this going. These live sessions will be technical updates by me and Thigao Barbosa, which I'll get into in a second, followed by fundamentals, okay? There's a lot of economic and political instability. Now, Marc Antoine, who is the head of global macro at Forex Gentleman, will get into the economic and political side. We got Thigao Barbosa, who's the head of trade management, who's going to get into the technicals at the very end in terms of things that we need to look for and watch out for in terms of entries and targets, okay? So this is going to be really fun. We're going to be doing this every Wednesday, so make sure to subscribe if you want to see the lives every Wednesday. Now, we're going to get into the technicals first, okay? So the pair I want to talk about today is USD Yen. And the reason why I want to talk about this pair today is because it's breaking a really strong area of sensitivity. Now, if you know me, you know about the push and exhaustion cycle. That's what I live by. That's how I trade. So let's start with the pair. We're going to start on the monthly time frame as usual because we have to look from the top and then bring it down. We don't know where we're going if we don't see from top down, okay? So USD Yen, starting on the monthly as usual, the first thing we look for is to identify area of horizontal sell and buy pressure. So here we see our monthly upper zone, here we see our monthly lower zone. As we see sell pressure, we see buy pressure. This is sell protection, this is buy protection, okay? Now, after we identify area sensitivity, the important thing to do is to talk flow and to look at price action. So we see sellers had control from our monthly upper zone down to our lower monthly zone. We see buyers enter the market. This is a push. Here we have an exhaustion. Now, the important information that the monthly is giving me is the sell pressure. We do not see a full and complete exhaustion to retest this monthly upper zone. What we do see is instead continuous bearish sell pressure in the market, okay? So this is telling me that buyers are having a hard time bringing price back to its monthly upper zone. Let's take it down to the weekly for a closer look. All right, so we've taken it down to the weekly. We identified our weekly upper and our weekly lower zone. Sell protection on a horizontal level, buy protection on a horizontal level. This is area of sensitivity, okay? So when we look at price action, what do we see? We see price has broken below this weekly lower zone to the downside. That's a strong and significant push because we know that there's been buy protection at this weekly lower zone for a long period of time. So this breaking close to the downside is telling us that sellers have higher time frame control, okay? So now let's take it to the daily for a closer look at this area. We're going to keep it on the weekly. I just want to show you price action quickly. Okay, so as you can see, at previous contact of our weekly lower zone, we have an injection of buy sensitivity. That's buy protection. At this contact, we see sellers with the bearish engulfing candle close push and break price below, okay? This again is telling us sellers have higher time frame control. Now, this break and push below an area sensitivity is a push because it broke an area sensitivity. So, what's after a push to the downside? An exhaustion to the upside. Push, exhaustion. Now we're seeing sell pressure re-enter the market as expected, and we're looking for a continuational push to the downside to retest our monthly lower zone. So when we're looking for entry on USD Yen, what we're really waiting for here is price action confirmation, a significant bearish engulfing candle close at completion of exhaustion. This confirms sell pressure has entered the market, and then we look for continuational push to the downside. If you want complete targets, if you want updates on entries, please make sure to join the Forex Gentleman community for your 7-day free trial. Okay. Now, if you know me, you've heard me say this before. Winners will enter at a completion of exhaustion, not at a completion of a push. So here we have a perfect example. It doesn't matter what pair this is. This is just about flow and structure. So here we see a weekly zone. We see a push to the downside. This is where losers will enter the market. Breakout traders will enter below at the break. We have new traders that will enter at the completion of a bearish engulfing candle at push, okay? So what do winners do? They stay patient, wait for completion of exhaustion, price action confirmation to the downside, okay? And here's another example of the winning trade the team has taken in the past. Push, okay? Losers will enter at completion of a push. Breakout traders will enter at completion of a push. But what do the professionals do? We wait for completion of exhaustion, price action confirmation. This confirms sell pressure has entered the market. and then we saw ourselves reach TP3. Okay, so that's it for today's technicals. I'm going to take it to Marc. I'm going to pass it on to Marc. Marc's going to talk about the economic and political instability going on, why we've seen low liquidity, what's been going on in terms of announcements this week. So, guys, I'm happy to introduce you the head of global macro at FXG. Marc, take it over, buddy.
All right. So, hey, thank you very much, David. Thanks, everyone, for joining the first FXG live session. So I will introduce myself. My name is Marc. I'm the head of global macro at FXG. So I'm going to talk about fundamentals. So what happened during the week, the past 3 months, the past 6 months, where are we going in terms of political, in terms of economics, what is happening, what is driving the market at the moment in terms of equities, commodities, FX, and I will talk about fixed income. That for myself, it's the real one of the most important thing to understand. So let's start with this week, economic calendar. So I like to look at trading economics every week. Obviously, I like to prepare myself during the weekend. But for example, today we're Wednesday, so I'm going to talk about what happened during Monday. So on Monday, we had the RBA minutes meeting. And what is really important to understand about this meeting minutes is that the Australia is being really being touched by what happens in China. So if China start to weakening, economies start to weaken, you'll see the Australia start to weaken, and you'll see New Zealand start to weaken, and that have been impacted at the moment in the market, and we've seen some rate cuts. So actually, when central bank start to rate cut, it means that the economy is uncertain, and they want to prepare themselves for the worst. So we're seeing RBA starting to weakening a little bit. We've seen last week the Reserve Bank of New Zealand that cut 50 basis points, so 0.5%, 0.50%. That was a lot. And that opened the door to all other central banks in the world. We saw India cutting 0.35%. We saw other central banks cutting. And that brings us to this week. So in terms of economic calendar, obviously, when you see a speech like this from a Fed member, you want to know, is he a voting member or is a non-voting member for the year? Is he a dove or a hawk? And what is he going to talk about? So you want to position yourself like this and understand what he's saying, because this is kind of pieces of the puzzle of which the next FOMC, the FOMC will be. So on today, we have the minutes. So for the FOMC, the central bank of the US central bank, the Fed, and for the ECB, they always releases their FOMC minutes 2 weeks after. For the Bank of England, it's when they release interest rate decision. They release the minutes just after. So for the US, it will be really interesting to look at and see what happened in the economy, and obviously what will be the forward guidance. So the forward guidance is where they see the economy going from now, and do they see more rate cuts through the end of the year, for example? Do they see inflation getting on target? How do you see economy from the U.S. perspective? So it will be really interesting. Obviously, we want to know the two main categories are inflation and growth. You want to know if there's some growth, if wages pick up, if companies hire more people, if they spend more taxes, and we want to know if people spend. Retail sales is a good number to understand if people spend, if inflation is on target. Because if people spend, if people work, people will spend more, and if people spend more, that will help inflation to get on target and get on reach. So it's really important to understand this economic this function of the economy. So let's get into ING. Think ING, one of my favorite for myself. So obviously at the moment we're talking a lot about the Fed, so we'll go from there. So in this article I will brief a little bit about the USD, the Fed, the Euro, Italian hangover, the GBP Boris in Berlin, and the CAD. What happened in the CAD during the week, and how can we use this Canadian dollar correlation with the US economy for us to prepare ourselves for the next FOMC meeting. So market focus returns to the Federal Reserve over the week. The releases on the FOMC. Fed Powell obviously is going to talk at the Jackson Hole Symposium during Friday. So the minutes will kind of help us to understand if we're at the end of a late phase economic cycle or we're at the mid-cycle adjustment. So we want to know where we're at the moment. So obviously the DXY is at the moment at 98.50, I believe. So the US is really, really, really strong. And we're seeing someone called Mr. Donald Jr. Trump that has been bullied the Fed members at the moment and is putting a lot of pressure for a rate cut. So let me just get this over here. So we're seeing, so Germany is paying 0 interest rate and actually being paid to borrow money. So what it means by being paid, the yield, the German bond yield is negative. So when a consumer buy a bond of Germany, he buys security, but security has a price, and that's the yield. So actually, if, for example, myself, I buy a German bond, I will be paying the German country just to have my money secured in his pocket. So that is kind of, that is really worrying the global economy at the moment, a global scale. It's not the only one that is negative. The French economy is also negative. And I have something really important to look at over here. So you'll see 2016, low US bond yield. So the yield was low. What did Trump did in 2016? He kind of helped the economy to growth by bringing a tax cut rate. So that created that created the monster of equities we're seeing at the moment, all-time highs in terms of S&P, earnings beat, companies keep growing and building, and we're seeing infrastructure going. We're seeing good numbers, low unemployment rate in the U.S. So that's being a part by Mr. Trump. But what we're seeing, and is really important to understand, is that the U.S. banks, the yield were kind of up, but in 2019, what at the reverse of this scale, we're seeing the Japanese banks that had always had interest rate negative, and the European banks negative. So that is negative rates, and that's not good in terms of the economy. Obviously, you want to have positive rates. You want to have the yield curve, which will be flat, not inverted. So it's important to understand that scale. So let me go with the USD. So obviously, we want to know what will be the impact of the meeting, the minutes today, what will be the speeches of Mr. Powell on Friday. Will he deliver? So obviously, the market wants to see a rally of the S&P, wants to see the economic going well, wants to see the Fed Powell talk with this tone. But obviously, we will have questions to ask Mr. Powell, and one of the main questions of last week was the inverted 2 and 10 years yield curve. So actually, what happened is that when it's inverted, it means that people don't have confidence in the long-term economy. So that is really something to be aware of. and that will be something that I'm sure Mr. Powell will respond to journalists and try to respond to calm the market and not fear the market. So important to understand. So the European Italian hangover, Prime Minister Giuseppe Conte resigned yesterday. So on Tuesday, so we know what happened. And it's important to know when you're looking at macro political instability, you want to look at the yield curve, and you want to look at the spread between the country that has a political instability, and you want to look at the country that is the biggest country of the Eurozone, which is Germany. Okay, so you want to look at the spread. So what is the spread, and how will it help you in your trading? So if you're trading the euro, for example, or you're trading other currencies like the pound or any basket currencies that are related to the Eurozone, so it could be the DAX, for example, which is the German equities, could be the CAC 40, which is the French equities. So you want to look at the spread. So the spread means that it's a difference between the 10 years bond of the German and the 10-year Italy. So when the spread tighten, it means that Italy, people have confidence in the Italian economy. When the spread widen, it means that people don't have confidence in the Italian economy, because the Italian economy, they give you more of a return in terms of a percentage of yield to your investment, because when you invest money in the economy, the way it works is when you loan money to a government, or for example, or you can loan money with a company. But let's focus now on the bond, the government bond. When you lend money to a government, every government has a default rate. So usually it's 5 years. So what's the odds of this economy to go default? So to crash in terms of understanding. So obviously, when you see the yield getting higher, it means that the default rate is higher. That means that your investment is not safe. Is not safe. So we're giving you a better return on investment because the default rate of this country is higher because of the political uncertainty and instability. All right. So that is for the Eurozone. So obviously the pound at the moment, the German Chancellor Angela Merkel, she's going to take the place of the ECB guy that is Mario Draghi at the moment. I believe it's in September or October this year. So that will be something really important to watch. So she kind of trying to help Boris Johnson at the moment, trying to solve the Brexit situation. We all know that the next deadline is on the 31st of October. We want to know what's going to happen. For myself, there's a few scenarios, but I see two main scenarios are happening, which the first one will be a general election, and the second one could be a second referendum. So for myself, a general election, we saw one with actually there's also this case of a vote of non-confidence. So we remember that Theresa May last I believe it was in March, won the vote of confidence, or she won it, and right after we saw the pound rally. So it's important to understand that if you're trading the pound, you want to trade the pound with the sentiment, the risk sentiment, which is with you. So you want to wait at the moment a major fundamental headline, actually either a general election, either a vote of confidence, either something that's going to happen to get, for example, in the pound. So at the moment, we're still at the uncertainty, and it's hard to look at where is this asset going. So for
what you're trying to say, Mark, sorry to cut you off. What you're trying to say is that there's consolidation on the pound, for example, because of the uncertainty, and it wouldn't be necessarily a smart move or high probability entry to enter the pound due to the fact that the pound is a fundamental, it's running fundamentally, okay? That's technicals take a backseat to the fundamentals. People are waiting to hear the announcements and the news, find the direction, and then enter in that direction. That's probably the best play in terms of swimming with the current and not against it, right?
That's exactly what I wanted to say. So yeah, you nailed it completely. So for the pound, big banks, institution, hedge funds, so big players in the market, they want to kind of understand where we're going, where is risk going, is there uncertainty, is there fear still ahead of us, or can we start to kick the can down the road with some good news, for example? So that could be something we will look at, and for sure, if there's a possibility of fundamental-driven event, for sure I will talk about, and I will put information for members to understand and to kind of break the consolidation zone and start to buy this asset.
Awesome, Mark. That's great, and I just want to plug in there and say that a part of Mark's job at Forex Gentleman is to go live with members pre any major announcement, and I'll be with him on that. So I just want to let the people watching this know that we will be updating the Forex Gentleman community and preparing the team and helping them understand what these announcements actually mean and how they affect the market.
So thank you very much, David. So for the CAD, what is really important is that as a Canadian economy, we work with the U.S. economy very closely, and it will be really important to understand where is the CAD heading in terms of fundamentals, and is there will the CAD actually cut interest rate next FOM next meeting for Mr. Polos? So if they cut, that means that the U.S. economy will likely cut there. So if they don't cut, so that will be really interesting to understand why they didn't cut. So it's like one of the only central bank at the moment that is really uncertain in terms of next monetary policy decision. All right, so let's get to U.S. bonds. All right, so a lot of people asking me about why is the U.S. dollar so strong. So that is really a good question. Actually, at the moment, the U.S. dollar is strong because there's a lot of uncertainty in all area around the globe. So you always need, if you want to understand this, you need to put yourself in the investor shoe. So if you're in the investor shoe, where will you invest your cash today, or your hard-earned money? Not in the Eurozone, because there's a lot of political uncertainty, and actually the yields are negative. Not in the Japanese economy, not in the China economy, not in the Australia or New Zealand economy. You'll invest in the U.S. economy, because it's one of the only economy that is doing kind of well in terms of numbers. Low unemployment, growth is there. Wages are there. NFPs, creation of non-farm payroll, are strong numbers. So actually, you want to invest your cash in the U.S. 10 years bonds, or in terms of bonds, U.S. bonds. Those bonds are denominated in U.S. dollars. So every time you see inflow in terms of treasuries, so in terms of bonds, you see the U.S. dollar rally, because these assets are denominated by U.S. dollars. So that is one of the reasons why the U.S. dollar is really strong. So one of the article is this one. I will suggest you to read it. U.S. bond funds will as investors seek safety. And if you have any questions, feel free to reach to me. So inflow of 11.5 billion the past weeks is the fifth largest under record. So that is not a small number. That is a huge number, and that's why you're seeing a strong dollar. However, Mr. Trump is trying to get this dollar cheaper, and one of his main goals at the moment is obviously to get it cheaper to help the U.S. economy to grow. So we all know that central banks, we all know that China last week with the fixing price, they always had this U.S.-China currency basket that was below $7. Last week, the U.S.-China got through $7 because of the China manipulator. They did manipulate the currency because of the headlines and the pressure of Trump pressuring them other tariffs. So that was something really important because it affected all the broad market in terms of risk. So risk sentiment got affected because of this. So we saw some tweets from Mr. Trump saying that, China is manipulating their currency. We saw some tweets from Trump that Europe is manipulating their currency and other people in the world, obviously. So we're seeing a lot of pressure from the U.S. economy, from the U.S. Mr. Trump to Mr. Powell. So it'll be important to look at what will be the next rate cut in terms of the Fed Watch tool on the 18th of September. Will the Fed cut 50? 25. The market is pricing in 98.1%, 1 or 2, 25.25 or 0.50 basis point, 25 or 50 basis points. So the market is pricing in there. So will the market deliver, or will Powell deliver, or will it be no cut? So it will be important to look at the Jackson Hole speech on Friday. So actually, one other thing I want to talk about, and after I will be kind of done for the day. So the fixing price. So every morning, it's really important to look at the fixing price in terms of the FX, a currency pair. So that is options, contract options, and when when they're their deadline. So we want to know at what price it will be, when will it be. So at 10 a.m. New York time, you want to know if actually you were in the trade before, or if you want to see price action actually at this time during the day. So you want to see if it's closed, if it's going to touch it. Usually the odds are that you'll see something happening at 10 a.m. New York time. So you want to look at these numbers, and it's every day it's at every day of the trading day. So in the morning. So one thing to be aware. And one of the tweet I retweeted from my tweet account. So if you guys want to follow me, it's DJ Marc 666 for the last sell-off that we had in equities. After we saw equities rally to the S&P, we saw it rally over 3,000. So 666 was the last sell-off of the equities. So we are competing with many countries that have a fair lower interest rate, and we should be lower than them. Yesterday, highest dollar in U.S. history. No inflation. Wake up, Federal Reserve. Such growth potential, almost like never before. So it's really important to understand that actually Trump is trying to weaken the U.S. dollar at the moment. The U.S. dollar is really strong. So if you're playing the game of Trump, the mental game of Trump, you're trying to position yourself and understand why he's saying this, and how can he still, stimulate the economy before the next recession, because we all know that we're going into a recession. So that's his goal at the moment, and I think he's doing it pretty well. So Trump trade war is keeping the dollar strong, not the Fed. I've talked a little bit about this. It's because of the political uncertainties, because of all these pension funds, these hedge funds, they invest their hard-earned money in the U.S. economy, so in the U.S. 10 years yield or U.S. 5 years in U.S. bonds. So that's why you see a U.S. denominated strong U.S. dollar. And one last thing, it's the Fed minutes preview. So that is something I would suggest you guys to go and watch. It's 2 minutes. It's really, really important. And actually, they're talking in terms of resume. They're talking about the 180-degree policy reversal they did last year. We all knew that the Fed wanted to hike interest rate. The economy was doing well and everything. And now we're seeing Trump putting pressure on China with tariffs. And we're seeing a reversal of the economy at the moment. So it's important to understand what happened and what will be the preview of the Fed minutes that will happen at the moment now. So I will. So that's it for me for today. So I hope you guys enjoyed it, and feel free to reach if you have any questions regarding fundamentals. So I will be really glad to help you guys. Cheers.
That's awesome, Marc. I appreciate that. And for all of you watching, that's a lot to take in, right? So the one thing that you have to understand is it's a process. It's okay if you don't understand everything that's going on right now, but this is a learning process for all of us. It's important that you continuously educate yourself. And this is, a game where you have to have your eyes open, okay? So you have to be sound technically, sound fundamentally, during times of instability like this, especially economically, politically. We have to lower our risk. We have to be smart. We don't want to make, all the money in the world overnight. This is a process, a marathon, not a sprint. Okay, so now I'm going to pass it on to Thigao, the head of trading management here at Forex Gentleman and Forex Gentleman University, and will also be the head of Forex Gentleman Latin America when we launch up on September 1st. So I would like to introduce Thigao Barbosa. Thigao, take it away, buddy.
Hey guys, it's a pleasure to be here. This is Thigao from Brazil. I'm head of trade management here for Forex Gentleman, and I want to show you something very interesting regarding to what David said about UJ, okay, from USD Yen analysis. And one thing to consider over here, it's wicks. The thing I want to draw your attention are wicks. Once we draw our zones, we find our trend, we can actually start to look at areas of liquidities. And wicks are signaling us, wicks are the materialism of liquidity left in the markets. So over here in the weekly chart, we can start to look at a strong push given on January. And after this push, price reached its peak. And straight after it reached its peak, it filled all the liquidity once again from the wick. So let's go top-down analysis. I want to go a little bit down one time frame on the daily, and we can actually see a little bit closer, okay? So all this area left is an area of liquidity, an area of sensitivity, where orders of sellers and buyers were placed. So usually when we see a week like this left in the charts, we can expect, of course, after a strong movement, that this week will be filled. And in this case, we can actually see, I'm going to go back again on weekly and zoom out to see areas which price could be going, since we have our overall bias. After David gave us our signal, and our signal is a short considering all the criteria, we can start to look at possible areas that price will reach within the next days or in the next week. So once again, we can see over here that price has not got able to fill this area of liquidity and also this area of liquidity. So once price reached this area, respecting all of our criteria of pushes and exhaustion cycles, we can start to look at price filling those areas of liquidity as well. Okay, guys? So this is one thing to consider, to keep in mind. After we manage to reach all of our criteria, we can start to look at area of liquidity in the markets, area that price will possibly go in after to fill all this liquidity. And this is the Thiago's tip. I hope to give something a little bit further and deeper on information the next time. It's a pleasure to be here once again. I want to say thank you very much for being live with us, and see you next time.
Thanks, Thigao. That was great, buddy. You know, what I really like about Thigao is that he's able to identify, you know, why things are happening. For me, myself, I try to simplify it. So area liquidity to me is zones, area sensitivity. So what Thigao in simplicity is saying is if price is able to break its first area liquidity, meaning its zone, area sensitivity, then it has no real pressure, whether it's to the upside or to the downside, until its next area of liquidity, aka zone or area of sensitivity. So what's important about what Thigao said is that there's areas in the market where you have to be aware, okay? And these areas are area liquidity, sensitivity zones, all right? So I just want to thank everybody for your attention. This was fun. This was our live #1, and we're going to continuously get better. We're doing this every Wednesday. Thank you, Marc. Thank you, Thigao. Thank you, Rob, who's in the back end. And I just want to say, if you want to join the Forex Gentleman community, which is, you know, probably the best community, Forex community, in my opinion, unbiased opinion, of course, in the world. And, you know, you have a 7-day free trial, because when you have nothing to hide, that's what you do. All right. So have a great day, everybody. And thank you from Team FXG. Have a wonderful day.